Oh, what's up, guys? Welcome back to Room Rock Capital. So today, what we're going to talk about a little bit of inflation, and we're going to talk about recession. Are we going to enter another phase of recession? And is this the bear market? A lot of people may ask very similar questions. Whether if we are now technically in a bear market, or are we still going to witness another bounce back of S&P index and etc. A lot of people will be frightened because recently we have gone through a devastative Bitcoin price plunge. We have seen many asset prices gone evaporated. We have seen all these asset prices went down severely. We have seen all S&P going down below 4,000 points. We have seen Bitcoin price level breaks $20,000 level. So which all of these price signals are key indicators, and these are telling us that Federal Reserve is raising interest rate and is not going to look good because the liquidity has been taken back from the market all the way to the Federal Reserve, because what Federal Reserve is doing is it raises the interest rate by 75 basis point. That basically means two things. One, the cost of money has gone up. It would cost more money. It will be more expensive to borrow money. And second of all, they would raising interest rate actually means that the market would have less liquidity because the Federal Reserve is shrinking its balance sheet. By Federal Reserve shrinking its balance sheet, it raises people's concern because people are thinking about is Fed going to keep doing this, or when would the Fed actually be stopped? Before we move into that kind of area and that kind of topics, let me remind you with one thing. Currently, we have raised about 75 basis point and also plus 50 basis point, and we're just halfway. We're only halfway of the entire raising interest rate. Right, because the Federal Reserve is planning to raise interest rate between 3.5% to 4%. Right now, we're somewhere around like 2%. We're still halfway there. So that means Federal Reserve, in order to suppress inflation from going up, in order to further control the inflation, the Fed is going to. Of course, there's no doubt the Fed is going to raise interest rate continuously. And also in the last Fed meeting, Jerome Powell said Federal Reserve is going to raise likely for another 50 basis point during the next meeting, during the next month. So we will expect very, very volatile market right now. But as currently we have seen that oil prices gone down for a little bit, and Bitcoin prices gone up a bit, and also S&P has been recovered for only a small amount. But there is still concern about, are we going to enter for a recession? From historical perspective, I would say it's very likely that we may encounter for another recession, because if we look back to what happened in 1970s, the ex-chairman Volcker has basically raised interest rate for very aggressively, and that caused a very large scale of recession. But as consequently, it's a good thing. It's a necessary evil because inflation is something I would say inflation is a bit like a demon, right? You kind of want to lock this demon inside a very deep ceiling. You don't want these demons from going out like just casually, just like that. So what you want to do is you want to cast some spell. You want to lock this demon inside of its very deep dungeon, right? So once the demon is being released, it would take very great effort for Federal Reserve and central banks to raise interest rate and at the same time try to lock up this demon. So what happened here is this inflation, which is the demon, is caused because there is a disruption of global supply chain because of the Ukrainian war. That is the reason why we are having these continuous inflation. And in order to control and contain that inflation, the Fed would have to make rapid decision. It has to rapidly raise interest rate. So far, I haven't seen enough signal, and what the Fed has been doing so far failed to convince me that the Federal Reserve has what it takes and has the gut to really kind of control this amount of inflation, because every time when they are trying to raise interest rate, they always acting very conservatively, because Jermaine Powell said he's going to raise 75 basis point, and then he raised 75 basis point, and he's not raising not a damn bit more. So that would be a problem, because if you want to raise interest rate, you want to surprise the market. So this is technically what we're going through right here. We have to the Federal Reserve is going to figure out somehow it's going to create a soft landing for economy. It's going to raise interest rate continuously, but it has to avoid the recession. But from historical perspective, this is very challenging. This is very difficult. This is nearly an impossible task for Federal Reserve to pull it out. So to pull off this kind of action, it will be really difficult. So what I'm saying is, I would suggest there will be very high probability that we will go through a recession. And currently, we are going through a stagflation. We have very high inflation, and the global economy is basically stagnated. So currently, as you can see, as investors, if you want to trade, if you want to continuously to be profitable, you need to be able to hedge against risk, and you need adequate amount of cash, and you also have to be able to long some defensive stock plus some inflation. Okay, so thank you guys for listening. This is everything from this episode. So I will see you in the next episode. And if you like my content, please share and subscribe. And you can turn on that bell for me so you can receive the latest show on time. And if you do not turn that on, it will be very difficult for you to receive any update. So thank you guys for watching. I'll see you in next episode.